I welcome all 4th sem students for the new subject called Indian Financial System. As you know, this subject will be dealt by me and this is your first class. So before going through this subject, so we should know what is finance, right? So what is this finance? So finance is defined as management of money and includes activities such as investing, borrowing, lending, budgeting, saving and forecasting. Okay, so when I ask you who is the king of market, you may say customers. Okay, so if I ask you who is the backbone of the company, you may say the employees. Okay, but if I ask you what is the blood of company, it is nothing but it is a finance. So which means the main thing what you need, right? So finance is defined as a management of money. So we can describe finances in a many ways, right? So we may say money also. So it is nothing but we are going to manage the large amount of money, so which includes the activities like we are going to invest, borrow, lend, budget, savings and forecasting. Okay, so finance is a system that involves the exchange of funds between the borrowers and the lenders and the investors. So we may have some basic examples like, so investing your personal money in stock, bonds, guaranteed investment certificates, borrowing money from institutional investors by issuing bonds on behalf of public company, is using Excel spreadsheet to build a budget and financial model for the corporation, etc. Okay, so by this we can understand what is finance. But finance also has some types, or we can say categories. Okay, as an individual, business, government entities all need funding to operate the financial field. So these are subcategorized in three main parts or three main types. So that is personal, corporate, public or government. So what is this personal finance? Personal finance is nothing but financial planning involves analyzing the current financial position of individuals to formulate strategies for future needs within the financial constraint. Okay, so which specifies that it is specific to the individual's situation. Okay, individual situation and individual's activity. So therefore financial strategy whatever you are going to frame, so that largely depends upon the person's earning, living requirements, goals and desires. Okay, the next, corporate finance. So corporate finance is a division of finance that deals with how a corporation deals with funding sources, capital structuring and investment decision. So this is primarily concerned with what? Maximizing the shareholders value through long-term and short-term financing planning, okay, and implementing the various strategies to it. The next is public finance. Public finance or government finance we can say. So public finance includes taxing, spending, budgeting and debt issuance policy, so that affect how a government pays for the services it provides to the public. Okay, so regular funding in a secured or mostly through the taxation, borrowing from banks, insurance companies and other nations also. So this helps government spending. Next is financial system. Okay, so your subject deals with Indian financial system. So you should have some ideas regarding financial system. So before going through this, so let's see what is system in this financial system. Okay, the term system in financial system so indicates a group of complex and closely linked institution. It may be agents, procedures, markets, transactions, claims and liabilities within a economy. Okay, when we say system, system has various parts and all these parts should work together to complete a desired goal, right? Okay, so we may say system means a computer. Computer has various parts. If one part is not working, so whole system is not working, right? So likewise, the system includes financial institutions, agents, procedures, market transactions, claims, liabilities, so which are within the economy. Okay, so financial system is an institutional framework existing in the country to enable what? Financial transactions. So financial system refers to a system which enables the transfer of money between investors and borrowers. So there are basic components of financial system. So here we see 5 components of financial system. So let's study one by one. So it may be the financial institution, the first one. So financial institution means the institution which facilitates smooth working of financial system by making investors and borrowers meet. Okay, so it is an institution which facilitates both the investors and the borrowers to meet together. Okay, financial institutions, what they do, they mobilize the savings of the investors either directly or indirectly through the financial markets by making use of different financial instruments, so as well as make use of the various financial service providers also. The next is financial market. So financial market means a place, right? So when we say market, it refers to a place. A financial market is a place where financial assets are created and transferred. So what we do there, we are going to create the financial assets and we are going to transfer it also. Okay, so financial market consists of two types. So one is money market, another one is capital market. When we say money market, so which deals with the short term financial assets, so which is maximum it will be less than 1 year. Okay, so when we say capital market, it deals with the long term assets. Okay, so which is long term in nature, which has a maturity period of more than a year. And again, when we classify your capital market, we see primary market, secondary market. So this you will study in the further chapters in detail. The next is financial instruments. Financial instruments means financial assets. So financial assets, so these are the important component of financial system. So if there is no asset, can you transact anything? If there is no goods, can you transact anything in the market? No, it's not possible. So this is the important component of financial system. The product which are traded in the financial market are financial assets. So it may be the securities or the other types of financial instrument. So that we treat it as financial assets or instruments. The next comes financial services. So services that is being provided in the financial by the financial institution in the financial market, we call it as financial services. Okay, so service in the financial market by the financial institution is financial service, we can say. So financial service offers a number of professional services like credit rating, venture capital, mutual fund, book building, etc. So financial service provider help to get the necessary funds and also make sure that they are efficiently deployed. The next comes money. So money is understood, right? So it's understood to be anything that is accepted for payment of product and service or for the repayment of debt. So it is a medium of exchange and acts as a store of value. Thank you.